we begin with late breaking news out of Washington. The president talking about a China trade deal a moment ago. Let's get to Eamon Javers live at the White House with the very latest. Eamon.
Yeah, Melissa, that's right. The president was in the Roosevelt Room signing as part of a signing ceremony for a smaller trade deal with the Japanese. But he also talked extensively about the prospects for a trade deal between the United States and China, given that negotiations are kicking back up this week. The president was asked if he would accept a smaller deal rather than waiting for that grand big deal that he's been pushing for. Here's what he said.
I think that we just have to see what happens. I would much prefer a big deal, and I think that's what we're shooting for. Can something happen? I guess maybe. Who knows? But I think it's probably unlikely.
And I also asked Melissa, the president, whether or not he told Xi Jinping, as has been reported, that he would remain quiet about the Hong Kong protests during the course of these China trade negotiations. The president said, "No, I didn't." He said, but we're negotiating. If anything happened bad, that would be bad for the negotiation. Politically, it would be very tough. The president sort of going on at some length here about the protests in Hong Kong and admiring the American flags, the Trump signs that he's seen in the crowd there, and admiring the pro-democracy protesters, but ultimately saying that the protests in Hong Kong and the trade negotiations with the Chinese are not linked, Melissa.
It's interesting, Eamon, because just, I want to say, a month and a half ago or so, the president, I believe, had made some comment to the effect of, we want to see that resolved first and then we can talk,
right,
as if the trade talks would be contingent on the protests in Hong Kong dying down. And yet here we are today, and it's a much different story.
Yeah, the president's simply saying today that he hopes it's resolved in a humane way.
Yep. Eamon, thank you. Eamon Javers joining us from the White House. This could be the biggest market-moving event this week, and we have President Trump making some comments today. How do you feel about this as a catalyst?
Well, we had some weekend press that had people a little concerned, right? So what are the core issues? Obviously, if you ask most people, I think this is certainly bipartisan. We want protection of American intellectual property. I think we, on some level, care about subsidies, although, you know, the industrial subsidies that China embarks upon domestically should not really be our issue, if you ask me. So maybe no one asked for my opinion. But as we get into the most thorny trade issues as to getting a deal, U.S. IP is the most important. The problem here is they're not going to put into any legislative, or it's not going into law in China, and that's going to be a big deal. So can we get there? You know, it becomes very difficult. And when you add in the subsidies part of it, where I don't think China's going to play ball, I don't see a lot that they're really agreeing on right now.
So everyone had thought we were going to get little deals going up to it. I think that's what the market was looking for. Maybe a little deal and then maybe something bigger. Something bigger is not coming anymore. They're not dealing with IP. It's not going to happen. It's a true negative for the market.
All right.
Yeah, I mean, I'm afraid of, you know, any progress on the China trade deal, I think, is really a head fake. And I think we keep seeing it, you know, when the market gets, you know, rough and down, then Trump tweets something positive about how progress is being made or constructive talks or whatever it is. And I think it wouldn't shock me to see the administration sort of have a new perspective on what a trade deal should look like, how vast it should be, what it should cover, and to have that be a much narrower focus and then declare some kind of victory. That could happen. But I don't think that's the kind of real trade deal that we need to really support the economy, to really get executives, mostly CEOs, who are thinking about what do they do for expenditures, how do they think about their business going forward, to have confidence that we're not going to see tariffs up and down. That's the real problem.
I think that's one of the thorniest issues. And if we don't think that China is going to comply, let's say, with any agreement on intellectual property, and tariffs remain in place, that's going to be used as leverage against the Chinese to get them to comply. And that has been the very thing that has caused all this uncertainty in the markets.
Right. And hence the volatility, and hence the hope for a resolution, but it's just not coming. And I think the real trap is that we know that this is the single area of the market, industrials, where after the election, it was the most bid up. And actually, on a relative basis, industrials as a sector peaked on the 1st of December, just after the election in 2018. And they've been going straight down ever since, making new 9-year lows just this week.
Well, you're right.
So at some point, are they cheap, or is it just more of a trap?
Well, if you think about, let's take FedEx, for example, a stock that I think at these levels trading at, you know, at $14 a share, it's 10 times next year. We know FedEx can get cheaper because I bet I said that at 180. But that was a $280 stock. Stock's down 50% from the blow-off top, which is in January of 2018, which is essentially a month before we got trade talk. So if you look at a FedEx, and you look at the steel stocks, they are all telling you how important the industrial side that Carter's talking about is to this. And there's no relief. I think, until you get some certainty. Again, we don't expect that the global economy turns on a dime. You need CEOs to understand how their business changes.
At the same time, when I read that Bloomberg article, as we all read, early this morning, and I thought, I wonder what the markets are going to do today. I thought they'd be lower because there's basically no other news in the market. There are no earnings, no economic data. We had that article saying that it's going to be a slimmed down trade deal, and yet we finished fractionally off.
Well, I think you had Larry Kudlow also talking about that they're not going to bar companies, Chinese companies, from listing here or delist companies listing here. So I think that was a tailwind.
Of an affirmation.
That was a tailwind. But I think this is definitely a negative for the overall markets if a bigger deal can't get done.
And the trajectory of the day was negative, right? To think about where the futures were down all night. Right? And you're worried and have the headline, and we're thinking, and then it starts coming back, which draws money in, only then to reverse and close out near the lows. That's very bad action, or they said a bad tape, right?